the capital in the crypto ecosystem is going to migrate from the other crypto assets to Bitcoin. As people lose confidence, as they get fearful about all these other crypto assets and crypto exchanges, they're going to go to the thing they know, the thing they trust. And the truth of the matter is, as Eric, as you've told me many times, the crypto people don't dislike Bitcoin. They actually like Bitcoin. They just thought that there might be another way and there might be another possibility. And now they realize that Bitcoin is the way.
The price of Ethereum has experienced a significant decline, falling by more than 5% in the past 24 hours and approaching $2,700. The causes underlying this collapse are both dramatic and complex, and investors are racing to find solutions to their questions by the minute. Ethereum has been experiencing difficulties as of late due to a number of factors, including the recent hack of Bit, the mounting concern regarding an Ethereum hard fork, and the impending bearish market scenario. There is no doubt that the Bit hack is one of the most significant blows to the price of Ethereum. Hackers were successful in compromising one of Bit's Ethereum cold wallets on February 21st. These wallets are normally considered to be among the most secure due to the fact that they store their cryptocurrency offline. In addition to the extraordinary amount of $1.5 billion that was lost as a result of the hack, over 400,000 Ethereum and enormous quantities of staked Ethereum tokens were also stolen. Blockchain investigators, including ZachXBT, have established a connection between the attack and the notorious Lazarus Group, which is a cyber-criminal organization based in North Korea. Analysts believe that these stolen assets will most likely be sold off, which will continue to put selling pressure on the price of Ethereum for the cryptocurrency.
Yeah, well, Bitcoin's a rabbit hole, and when you start going down the rabbit hole, first you have to learn all about Bitcoin, and then you have to learn all about the block size wars, and then you have to learn about the history of the crypto industry. And somewhere along the way, I started studying Gary Gensler. I took his class at MIT. I went back and I watched every minute of 20 lectures at MIT. And then I started reading everything written by anybody. And as you know, I read all the lawsuits. I read the CFTC lawsuit. I read the Bittrex lawsuit. I read the Coinbase lawsuit, the Binance lawsuits, all of the legal judgments. And I listen to all the congressional testimony, like every minute, like everything that every congressperson or every senator has said about Bitcoin for the past 3 years.
This is true.
And then I talk to you about it. Okay, and so here's my opinion, right? First of all, in the beginning, there was Bitcoin, and it was good. And there was a unit of account, and it was called BTC. And there was a network that could not be censored, and it was called Bitcoin. And then along came smart people that learned about Bitcoin, and they arrived to fix Bitcoin. I just heard about Bitcoin. I'm here to fix Bitcoin. And they divided into two factions. There are the people that heard about Bitcoin and wanted to help Bitcoin the hard way. And they worked on Lightning, and it took years from 2015, and they're still working on it 6, 7, 8 years later. And they worked on Bitcoin applications, and they worked on Bitcoin companies, and they worked very hard to raise millions and tens of millions and hundreds of millions and billions of dollars to buy Bitcoin. That's the hard way. And those people are in this room, and they're in the Bitcoin ecosystem, and that's Bitcoin and Lightning and Bitcoin maximalists and people that believe Bitcoin. Samson Mows and the Adam Backs and it's the Elizabeth Starks and the Jack Mahlers and the Jack Dorseys, and you know who they are. And it's hard work. It takes a lot of time, a lot of money, a lot of bleeding. Then there's another group of people that heard about Bitcoin and they wanted to fix it. And they took the easy way. And the easy way is a few shortcuts. It was, I want to make money by copying Bitcoin. I want to compete with Bitcoin with a new token. I want to bank Bitcoin. I want to rehypothecate Bitcoin. I want to loan you money on Bitcoin. I want to generate yield on Bitcoin. I want to run a Bitcoin exchange. I want to offer you Bitcoin derivatives, and I want to create every other flavor of Bitcoin. And I got the new Bitcoin, the quantum resistant Bitcoin, and the energy efficient Bitcoin, and the faster, more beautiful Bitcoin with the crypto kitties on it. Okay, that's the other set, okay? That's crypto. Now, what's going on right now is that and I wanted to create the US dollar on a crypto rail, and I'm going to give you Bitcoin without volatility. And I'm going to give you a network, a crypto network that clears in 1 second, which is cheap and free. So what you see with the regulation right now is the regulators are saying, we're not comfortable with the stable coin. We're not comfortable with the crypto exchange. We're not comfortable with the crypto token. We're not comfortable with the shortcuts. We don't want you to do an ICO. We don't want a corporate coin. And the result of all of that is the crypto ecosystem, which in the beginning was Bitcoin, and then bifurcated into all these other things, is going to come back together and unify on Bitcoin again. And what we're going to see is that instead of the unit account being the dollar, and instead of the network being a crypto exchange offshore, now the unit of account is going to be BTC. And the crypto network is going to be Bitcoin. And if you want a fast Bitcoin network, a fast payment network, it's not going to be a crypto exchange. It's not going to be a proof of stake token. It's going to be Lightning. And the gas is going to be Satoshis. And everything is going to anchor into Bitcoin. So this is a very painful time period for the crypto industry. And you can read it on the news. But it's a very expensive, painful, difficult, educational episode where people that believed in Bitcoin, but then went off to do all of their other altcoin experiments and crypto experiments, they're going to realize that there was a reason that you might want a censorship-resistant network that spit out a block every 10 minutes. They're going to realize that there's a reason for a mining network that spits out 400 exahash of digital power. They're going to realize that there's a benefit to working really long and hard for many, many years to do a Lightning type network. They're going to realize that these things they took for granted, they thought, we can just have our cake and eat it too. We can have a decentralized network that has the dollar as the unit of account. We can move the money at the speed of light for free. And we don't really need to use energy and mining ASICs and Bitcoin. And we don't have to pay for Bitcoin for gas. We'll just issue our own yo-yo coin, and we'll use that for gas.
In the midst of all this mayhem, rumors of a possible rollback of Ethereum are becoming increasingly louder. There are some people in the cryptocurrency community who are discussing whether or not the Ethereum Foundation ought to think about implementing a hard fork in order to repair the bit hack. Co-founder of BitEM Arthur Hayes and analyst Matthew Arrett are among the influential voices that are putting pressure on Vitalik Buterin, who is also the co-founder of Ethereum, to take action. A strong similarity can be seen between the current scenario and the DAO breach that occurred in 2016, which ultimately resulted in Ethereum being split into Ethereum and Ethereum Classic, ETC. A rollback that occurs today, on the other hand, might cause significant damage to Ethereum's credibility, leading investors to question the immutability and decentralized character of the cryptocurrency. As of yet, the Ethereum Foundation has not made any public statements regarding the problem. Nevertheless, there are rumors that a community vote could be held on the subject. There is a bearish market structure that is emerging on the charts, which is adding to Ethereum's problems. According to analysts, a bear pennant pattern is forming, which normally indicates that the price will continue to fall. A sharp decline is followed by a period of consolidation, which frequently results in another sharp drop. This pattern is characterized by a strong downward trend, In the event that this trend continues to play out as anticipated, the price of Ethereum may drop by an additional 28%, with the possibility of reaching a low of $1,953 by the month of March.
And I think that those people are going to realize that Bitcoin is the safe haven asset. Bitcoin is the risk-off asset. Bitcoin is the censorship-resistant network, right? Bitcoin is the reserve asset of the ecosystem. And that means that as they lose confidence in their tokens, they're going to trade their tokens back into the reserve asset of the ecosystem, which is Bitcoin. When they lose confidence in an offshore or an onshore crypto exchange, they're going to trade back into Bitcoin. When they lose confidence, when they think that, well, that's not censorship resistant anymore, right? Those are all nation state captured networks. They're going to go back to Bitcoin. And so I actually think that this is reminding everybody why Satoshi did what Satoshi did. It's going to bring everybody back to their roots. And as people lose confidence in all of these other crypto ideas, which were meant to make Bitcoin better or fix Bitcoin, right? And I'll give people a benefit of the doubt. They're trying to fix Bitcoin, but they're taking shortcuts. Or maybe it was their business, right? I'm going to be in the business of trading Bitcoin, rehypothecating Bitcoin, hedging Bitcoin, creating competitors to Bitcoin, improving Bitcoin. That was their business. I think that they're going to realize that, in fact, the best idea always was to buy and hold Bitcoin, take the long view, and if you see an issue, if you see something that is suboptimal, like I want to pay for a cup of coffee in a split second for free, if you can't do that with Bitcoin, you don't reinvent the ecosystem. You go back and you focus on creating either a layer 2 or a layer 3 solution on top of Bitcoin, and you solve the problem via Lightning or solve the problem by a custodial Bitcoin wallet. And so ultimately, the capital in the crypto ecosystem is going to migrate from the other crypto assets to Bitcoin. As people lose confidence, as they get fearful about all these other crypto assets and crypto exchanges, they're going to go to the thing they know, the thing they trust. And the truth of the matter is, as Eric, as you've told me many times, the crypto people don't dislike Bitcoin. They actually like Bitcoin. They just thought that there might be another way and there might be another possibility. And now they realize that Bitcoin is the way.
Market technicals also indicate issues. At 48, the Relative Strength Index, RSI, is neutral to bearish. Below 40, selling pressure may increase. Fear and uncertainty are lowering Ethereum's price, leaving investors worried about what will happen next. A perilous precedent might be set if the Ethereum Foundation reverses the reversal, making Ethereum an untrustworthy decentralized network. If the market remains negative and hackers sell their stolen Ethereum, selling pressure can accelerate the drop. Ethereum's short-term outlook is uncertain due to several unknowns. In the meantime, investors are wondering if Bitcoin's recent extremes with the US dollar index, DXY, are a warning sign or an opportunity. Bitcoin and the DXY have historically been inversely related. Bitcoin usually rises when the dollar falls and falls when it rises. According to researcher Jamie Counts, this relationship is stronger than ever, which might affect Bitcoin and worldwide liquidity. Since it compares the dollar to a bucket of key foreign currencies, the DXY is an important indicator of the global economy. International investors can borrow money and invest in Bitcoin more easily with a lower dollar. Therefore, a falling DXY signals higher liquidity. If the DXY keeps falling, Bitcoin may rise sharply, offering a buying opportunity. Extreme correlations can suggest an overextended market. Thus, a sudden shift could change price action swiftly. 106 is the DXY's key level. If the index slips below this level, Bitcoin and other risky assets may rally. Although this is an exciting opportunity, investors must be cautious, watch market movements, and be ready for unexpected reversals in this high-stakes financial struggle.